Hey guys, welcome to another episode of Real Estate Wisdom Podcast. In today's episode, which is episode number 21, we have a returning guest, mortgage agent level 2, Tyler Lipinski. Now we're going to find out what level 2 is from Tyler. Welcome back, Tyler.
Thank you very much, Vish. Very happy to be back. I think we did a good job on our first one, so I'm happy I got the call back for round 2.
If you do mind, you can come mic closer to yourself, because we're finding these days some of the audio, it varies, like we can go back and forth.
I'll scream into it. Yeah, I'll use my.
So I won't make you comfortable, okay?
No, it's good to be back. I'm happy to be back, and thank you very much for having me. I know we have quite a bit of stuff to talk about today, so.
We can. That's why we're here.
We can get right into it.
The mortgage agents, realtors, they love to talk, and that's what we do.
Sometimes people say we like to talk too much. So.
I know.
We had to cut our video down the last time.
I know there was
so much footage.
Yeah, but I was watching it I should have done only one video, but because it was the first, so we were not sure people going to watch it for half an hour or hour and a half. Because I was listening one of the relationship video right now. It's hour and a half. Yeah. Right? But you're listening in your car and we keep continuing on that one.
For sure. Especially when you get, like you said, a mortgage agent and a real estate agent talking with each other. It could be a very long chat.
Right, for sure.
Yeah.
Well, how's life?
Life is good.
Life is good.
I think we're seeing light finally at the end of the mortgage or the interest rate tunnel.
Yeah.
There was a couple of signs last year. There was a couple of light holes poking out.
Right.
And now I think we're really starting to see it. We've seen some lenders have some rate drops over the last little while, which is a really, really good sign.
Right.
And I think we're gearing up for a really, really strong 2024. You'll get a lot of differing information from some people, right?
For sure.
Some people will say maybe not so much this year, maybe leading into 25. I like to always take an optimistic approach.
Right.
And based on the conversations that I'm having with my clients today,
right,
I think it's going to be a really, really good year for us, for everybody, really. Yeah.
I hope so.
Yeah.
I hope so. But before I going there, you're jumping over here, I just wanted to know, how was your holidays? And I was going to share my story, which you already know, that I took that opportunity, right?
During
the holiday,
and
right time to buy my condo.
Yeah, congratulations!
Right? Thank you.
Awesome stuff. No, it was really, really good, and I think it was good timing for you too.
And I was considering the same thing, what the mortgage is going to happen. But I think what happened is basically last time when Bank of Canada halt, it's not increasing it. That gives some traction to people.
100%.
But some people are waiting it's halted, but when it's going to come down, and they're waiting. And in my opinion, what's going to happen is soon, even the 0.25% rate come down, you will see the storm.
Yep.
And then prices go up. Now the seller's on them, right? And then again, buyers not winning. They're trying to win hard from last 5 years, but they're not winning, right?
It's tough, but I think the same thing is going to happen because when we saw the first halt on interest rate increases, my phone was blowing up.
Yeah.
Right. A lot of people inquiring, oh my goodness, this is amazing news.
Right.
It's time to pop the champagne. And people were very, very happy. But then there was still a lot of folks that didn't do anything in terms of buying. They was just more so, okay, what does this mean? Collecting information, getting themselves prepared.
Right.
So I think I said it on the last time that we were together too. There's a massive pool of people that are just sitting there waiting. And I think they are waiting for that first decrease because they think that, if they can time the market properly, which is something that is crazy, time the market, something we've been talking about for the last 3 years.
Right.
It's going to be difficult because there's going to be so much competition, right? So then the question that I get a lot from my clients is, okay, well then when should I buy?
Right.
When do I do it now? And if I do it now, what do I do? And I know we'll talk a little bit more about strategies and recommendations later on, but it becomes a point of when is the right time to buy, and whenever that is, what is going to be the right strategy from a mortgage rate perspective. So I think it's going to be very, very interesting next little while. 100%.
For sure. These are mixed news coming from mortgage world. The economy is like, inflation is high. Like now didn't come out like an employment thing didn't come out well. So expecting like a not to decrease. And it's also like, few months ago when they were sitting and making those decisions in the board or whatever they call the committee, they half and half, like it was 50-50, that we keep on increasing or we put a halt on it, right?
Yeah.
So, I think like that's getting played with people's mind, but also they don't want them to get out of control because soon people feel comfortable. What's going to happen? Like, let's go and buy.
Exactly, 100%.
And people gone on board, but people don't learn from their mistakes. Right?
Yeah.
We don't. Like we as a human, we don't learn from our mistakes, and we do the same mistakes again. So I know this is the world, like, what we deal with. As a realtor, like what I tell everyone, your question, you were saying that, like, people asking when is the right time to buy. In my opinion, like, and this could be wrong, like, but in my opinion, which I have seen a success in, when you're ready, when your financial situation is ready, and also looking into the appetite for risk. Right?
100%.
Appetite for risk. What's your appetite for risk? If interest rate goes up, again, would you sustain? And if the interest rate is going to go down, you're not putting yourself in a locked position that say you cannot go down, like, and now I'm paying more. So that's a dilemma, and that's what the question I was going to ask for you, because my mortgage is done, but I haven't signed based on the interest rate yet, because I myself was like waiting. Should I do like a fixed 2 years? Should I do 3 years fixed? Or should I do variable right now because it might come down? What to do? And variables high, right?
It's a difficult situation to be in for folks who have purchased a home just recently, determining which path of an interest rate they should go more towards, right? And that's why I think one thing that a lot of people, I think, don't really remember or think of is at the time you get your approval from the bank or whoever your financial institution is that's providing the financing, you don't have to take that rate when you obtain your agreement of purchase and sale, right? So you can get your approval with a placeholder rate, right? Let's just say, for example, it's a 1 year fixed rate. And over the span of the time that you have from acquisition or
closing,
you can change that rate.
Yeah.
Right. Because we're in a time right now where rates are changing so much and so often that your rate at the beginning of that process is going to could be completely different at the time that you're ready to close. Now, I'll add a little asterisk to that.
Yeah.
You don't want to be at the day or 2 days before closing,
for sure,
changing things around.
Oh, for sure.
Because then that just gets pandemonium. I'm sure you've had some experiences too where a client says, well, I'm going to change this, I want to change that. And it's like, no.
In one case happened, like, and they changed their mortgage from bank to somebody else like 2 days before.
And
I was not aware of as a realtor. And that was shock.
And that's not fair either for you, because it's your commission as well, right? That you need to make sure
the worst thing
protected.
Was, the mortgage agent, it was the RBC mortgage agent. He's the one who referred me this client. And this client was ditching him and going somewhere else.
Right? But that speaks to the level of relationships that you can connect with, right? Even if a referral came from somebody at the bank, they might appreciate working with you much more than they did with that person, right?
But that's what happened. Like, I exactly remember the client name and what the scenario was. So he went to CIBC, and CIBC was offering it like 0.5 or less. And he would work for a school board, so he was getting a school board discount and everything. Like, even 0.5% they're giving it. Turn out, like, I'm like, okay. So I talked to my mortgage agent in RBC, and I said, hey, this is what's happening. Are you aware of that? Like, I don't know. Like, I have all the paperwork ready. You just have to sign. And I said, did you connect with him? And he was like really pissed off. Okay, if they want to go, they can go and everything. I'm like, okay, calm down, calm down. Because being myself, like, calm and make things work. Let me ask them one thing. Did they get in writing? Okay. And what happened is, like, they got in writing. I'm like, okay, can you send it to him? Because he worked hard on it. Can you do me a favor? Is everything else was all right with the mortgage agent? Like, he treated you well, information-wise? He did treated me well. Everything is great. But again, a rate come out, right? So when he sent the document, it turned out there was a hidden fee in there, which ultimately is coming out same.
Yeah. So it really makes no difference.
So it really didn't make a difference. So when he got that, and he till date, like, he appreciated me for that, like, saving that client for him.
Of course.
It's not understanding. I'm like, that's the reason. Like, even my when I do the negotiations, I want to see things in writing.
Yeah.
Right.
Yeah.
I want to do the due diligence. Oh, that particular property conditionally sold for this much. Okay.
Prove it.
How do you know?
Yeah.
How do you know? Like, as a realtor, do you know? Oh, I know the realtor and everything. He can't tell you.
Right? Yeah.
He can't tell you.
No, it's true.
Right.
Well, from that perspective alone, Vish, right? If I can just add.
Yeah.
On our side, we have a lot of compliance documents that have to be sent to our client when they are ready to sign paperwork for a mortgage approval. Right. And one of those documents is a disclosure. And on the disclosure, we have to, and we legally have to do this. We have to disclose all of the fees that are associated with the transaction in this document. So on our side, you can definitely get away with having some hidden fees in a certain sense, but realistically, they need to be listed for the client there. And that's why when I have my clients in all of our approvals, and I think I can speak on behalf of my entire brokerage at Vine, we go through that commitment with the client, or even before we go through it with the client, we go through it ourselves, line by line. And sure, it's painful to go through some of those documents because there's a lot of pages to them, but that's just the reality of what we have to do in order to ensure our client is being protected and that they know exactly what they're getting themselves into, right? Even something as small as a $250 or $300 appraisal fee, right? That could be something that gets overlooked when a client's looking at documents.
Oh, for sure.
But we have to include it in there. And then, it's a day of closing. They get their trust ledger document from the lawyer. Tyler, what's this fee? Tyler, what's that fee, right? And it's like, well, that wouldn't have happened if the other mortgage agent or whoever it was is doing complete due diligence. So the client knows exactly what's going to happen. And that's why I always tell my clients too, go get a draft trust ledger and get it ahead of time.
And that's remind me to thank you because I said all my mortgage thing going through you, but then also because my bank is RBC. And when you told me that as a self-employed, they have a better program, go with them. And that's what built my trust with you because you gave me the right advice.
100%. Right? Sometimes it's not about us closing a deal. And I know that there's some more people out there that are a little bit more narrow-minded in the sense of, I gotta get this deal closed so that I can get paid on it. Right. I think that we operate a little bit differently in the business of making sure that the client's getting the best possible solution that they can. For sure. And if sometimes that means that I have to refer the deal elsewhere, that's what's going to have to happen. Right. But for the most part, we have a lot of really, and I know I'm kind of changing directions now, but there's been some new programs that have come out, some different lenders that we've gotten access to lately. So a lot of really, really good and exciting things are happening, in my opinion, leading into 2024 with respects to options that we can provide to our clients, right? It's not just the traditional, you fit in this bucket, that's what we're going to go with.
Well, you can
look outside the box.
But when you have these options, you can be creative on that, right? And definitely when I have the discussion with you, and we were talking about this one, like, self-employed program, they have better. And then I went over there, back and forth. And every time I, verifying with you. And that built me more trust towards you. And that's the reason we're sitting doing the second podcast over here.
Exactly.
Right? That it's not like, it's not about the transaction. Otherwise, you will be like a normal mortgage guy and say, like, F you.
It's easy to do it that way.
You didn't give me your own business. How I can expect you to get your client business, right? So,
but it's a lot easier to be that type of mortgage agent than it is to say, okay, like, there could be a better solution out there. Let's explore other options, as opposed to just saying, this is what I can do for you. Take it or leave it, right?
It's the same thing happening in my business because I always taught before when I was in retail. To my salespeople, is building long-term relationships.
Correct.
And when you're building the long-term relationships, you have to not looking into the short term, but in the long term on that.
One of my mentors said it best.
Yeah.
He said, don't chase the penny, chase the relationship. And I think that speaks
That's a good one.
volumes, right? Like it's very, very important in what we do.
Yeah.
As advisors, really, right? Because
That's
are
what we are.
advisors at the end of the day.
That's what we are, right?
Yeah, we need to be more mindful of the relationship as opposed to, the commission that's going to be there at the end of the day.
That's a byproduct.
Yeah, 100%.
And that's what, a lot of time it happens, people asking about the commission first.
Yeah.
And I said, that's the last thing I want to talk about. I want to talk about, first you look into that, what information I'm providing you. Am I providing the value to you? If I'm not providing the value to you, and if you don't see the value which I'm, saying to you or doing for you, then definitely I have no right asking.
It's a different conversation.
To pay, right? Different conversation, right? You get a lot of cheaper,
for sure.
Commission,
and then you're in competition with so many different people. Do those people have the right?
Honestly speaking, I think I have no competition. The only competition is I have with myself.
Yeah.
Okay.
Yeah, I like that.
Yeah.
I like that.
Getting back to questions,
Yes,
so what do you think? How has the Ontario housing market been performing recently, and what trends do you foresee for 2024?
We talked a little bit about it at the beginning, and I think you and I are very like-minded as to what we think is going to happen.
Right.
So, first of all, the market's been great. I'll be honest, my phone has been ringing a lot this year at the beginning of this year. I know we're only, 9 days? Today's the 9th or 10th?
Today's 9th, yeah.
9 days in, and it's been very, very busy. What I found is a lot of clients from the past have began to reach out again, and they're now, listening to the news, hearing that there's potential rate drops coming from the Bank of Canada, hearing that other bigger banks and financial institutions have applied rate decreases on their products and their offerings. So it's a lot of people that want to get updated information onto what they qualify for. Those people, though, are still kind of holding off, and I think that they are holding off for that first rate drop. Now, the question that becomes is that a good idea? Because if that happens, like you said, are housing prices going to start to skyrocket when there's a lot more competition, right? And we're in a completely different market than we are in right now.
Yeah.
Are we going to go back to no viewings, no conditions, just blindly, putting out offers in there?
Yeah.
I hope not, because
I hope not
that
either.
was a bit of a crazy
I just
time.
did another episode with the home inspector yesterday, and
Yeah.
we were just talking about the same thing, that people were ignoring those ones, which I never recommend people. Even you're not putting a condition, we say still get the home inspection done.
Yeah.
Right. So we talk about that
For sure.
And exactly the same thing. It's what's going to happen. Its mindset changed overnight. I have seen it. We've seen it last spring actually.
100%.
Last
100%
spring, when the rate
Same
halt.
thing. Yep.
And then you see the activity and people say, what's going on? We just halted and still pacing.
And there's some real data too that we can share if anybody wants to reach out and ask for us to share with them. You can see the trends shift completely after that first halt.
For sure.
And I think that we're going to see a massive shift after that first decrease.
Yeah.
When is it going to be?
Nobody knows.
We don't know.
If I had the
Hold on,
crystal ball,
I have mine right here now. But we don't know.
Ball.
But I think it's definitely going to have an impact when we see that first decrease. And I think people are going to go a little bit crazy. And I'm talking even further back in 2020, when COVID first happened.
Yeah.
A lot of people just stopped everything that they were doing.
For sure.
Right?
It was all
there
on a halt.
there were a lot of really great interest rates that you could have gotten at that time.
Right.
But even still, some folks just said, I don't know what the heck is going on right now.
Yeah.
I know these interest rates are, as low as they're ever going to be, but I just can't do anything because I don't feel comfortable. And it goes back to risk tolerance too, right?
Absolutely.
That's why there's a lot of clients right now that are like-minded in the sense that I think I need to buy now before the first decrease so that I can get in for a decent price, right? I think we'll talk a little bit about it later. If we do, I'm sorry, but I think this is something really important to discuss too.
Yeah.
Is the interest rate choice that you make, and it's
That's my question.
Yeah.
I'm on that
Yeah.
that place right now to decide, like, should I take a variable?
Yeah.
Should I do like a short-term fix?
So then let's break that down right now.
Let's go.
Take this with a grain of salt, because every single person is case by case,
Right.
and everybody has a different situation. Everybody has different risk tolerance.
Right.
And that has to be taken into consideration on my side when I'm having these discussions, because I could have a conversation with somebody who says, Tyler, I want the 5-year variable.
Yeah.
That's all I want. Give it to me. No problem. And I'm like, boom, let's do it.
Yeah.
Then I have a conversation with the next person. I want the 5-year fixed. And it's just completely opposite,
Different.
right?
Yeah, for sure.
One thing that I'll say, and I had a conversation yesterday with some clients of mine, and really, really great clients, existing clients. We've done many deals with them before. And it was the longest phone call that we've ever had just about rate.
Oh, really?
Because we were doing this breakdown, amortization schedule for this scenario, amortization schedule for that scenario.
Yeah.
Finding out what's the difference in cost for this, what's the difference, and these are the things that your mortgage agent, the viewers, should be doing now. It's not as simple as it was in 2020 or whenever the rates were super low.
Yeah.
Yes, take this variable rate, it's going to be great, or take this fixed rate, ride it out, it's going to be great. We're having to do a lot more due diligence and a lot more digging into the client's mind to see where they fit and what they think is the best solution. So right now, it's difficult for me to really recommend anything longer than a 1-year fixed rate. Maybe a 2-year.
2-year.
Only because we're expecting interest rates to be much different by the end of this year.
Yeah.
In a much better situation.
Right.
A lot of economists and forecasters, and again, you're going to hear so many different numbers from so many different people.
Yeah.
But if I take kind of the average, and I always like to take a little bit more of a middle ground as opposed to being less or more aggressive.
Right.
We can expect things to come down maybe 1% or more by the end of this year.
Yeah.
So if we're taking a 5-year fixed rate today,
Right.
that 5-year fixed is going to look very different at the end of this year.
What's the 5-year rate right now?
For an insured or a conventional style transaction, you're going to be looking in the 5%, maybe, mid 5%.
Mid 5%.
I had a lender offering, and I think they're still offering at $499 for a 5-year fixed on the insured space, less than 20% down, under $1 million purchase. And that was something that was very attractive. And you're going to see a lot of lenders promoting that 5-year fixed rate right now so that they can lock clients in at the higher rates for as long as possible.
I know you're getting the calls from banks right now for bonuses. I heard that from the other mortgage.
But those are always going to be there, right? It doesn't mean anything to us because we can't sell 5-year fixed rates right now in good conscience. It just does not make sense for anybody to do that, in my personal opinion, unless you have a client who just says, I can't sleep without knowing that my payments are fixed for the next however long it is. And that's a completely different conversation.
Well,
right?
I can tell you, my wife, my ex, she was the last one, and she never took variable. She always took fixed because she wants to know how much is going every month, so it's not going.
And that's fair.
It's fair,
totally fair.
And it was nothing lost. When I look into that, when I average out, we did the right timing, or lucky, I had right timing. That has worked out.
Yeah.
Right.
Yeah.
Last time when we have to do it, one of our property, we paid 6.75 while we were paying 2.75, 4% increase.
Yeah.
But then also with that time we look into that, we locked it for 2 years, knowing that, or just looking at the data and also the intuition on that, what's going to happen, is going to make sense or not, because already it was 7-8% almost, right, for the variable was, right?
Yeah.
And it was hard to digest, when it's going to come down, right?
Yeah, no.
And this situation, what you just mentioned over here, I'm right now in that situation, and so I'm just thinking, should I get 2 years?
Yeah.
Or should I take variable and just wait a little bit?
So
what's your advice for me?
We've seen, I can speak specifically to you because I know your application very well, but we're seeing a lot of variable rates coming back.
Yeah.
A lot of clients are taking that variable option from lenders who are offering significant discounts to prime rate, right? If you have a significant discount to prime, I would really consider
that, yeah.
locking it in now, right?
Yeah.
Take that variable.
But the variable
rate
is
today.
also like a 5 years, right?
Yeah, 5-year variable. You can have some lenders that offer 3-year, but the most common variable term is a 5-year term.
Okay.
We have some lenders, new feature, alert.
Yeah.
Very, very cool feature too. It's a 5-year variable rate, but it's open after 3 years.
Okay.
So you
can
still
change.
have the same discount to prime for the entirety of that 5 years, but the discharge penalties are gone after 3, or a lot heavily, much more heavily discounted.
It's 3 month interest anyway,
Yeah,
right?
yeah,
So
3 months interest anyways.
Yeah.
And so that's another thing too, is there's variable options out there. If you had to break your variable mortgage for whatever reason,
Right.
it's only 3 months of interest with most lenders. Some lenders have different, things in here, but the most common penalty to break a variable mortgage is 3 months of interest.
Right.
Another solution too to consider is a 1-year fixed. And sometimes folks get a lot, turned off from going that route because it's going to be the highest of the fixed rate options.
Yeah.
But you have to think long term in the sense of how flexible can I be, and how flexible do I want to be with respects to renegotiating my mortgage. And I think right now, given that we're in an elevated interest rate environment with some decreases happening, all along the way, and I would say over the last month or so, we've seen a lot of lenders throw out some rate drops. So does it make sense to take a 3-year when you know that rates are going to be lower by the end of this year, right? And those are some of the calculations that I did on that call yesterday with a couple of my clients to determine if they take the 1 year now, what is it going to look like after this year? And then comparing that with taking a 2 or 3 year today. And it really did make a lot more sense going the 1 year route, having the ability to renegotiate. And comparing 1 and 2 year fixed rates, it's not like we're talking about 100 basis points or 1%. They're not that different. So it's almost like you kind of stomach a little bit of a higher payment for the first 12 months, right? And then we renegotiate and determine what makes more sense.
And what's the rate going on for 1 year?
You could get 1 year in the high 6s.
Yeah.
Which is really not that bad of a rate when
like
we've
2
been
years.
seeing things.
2 years is 6.55 around? Yes, 2 years is 6.55.
So again, we're not talking about a massive difference here.
So I was looking into that, looking into consideration, and the variable is how much right now?
I had a lender offering variable best for like 6.5-ish range.
So that's similar.
Yeah, yeah.
Yes.
And so that's why you think, why not take the variable with the expectation that it could come down as early as April, right? Again, not a 1% or even 50 basis points. It'd probably be
because what I'm thinking is with the prediction, all the things going on, up to 1% will come down this year, and looking into that aspect, and they say, okay, if I take the fix 1% down, ultimately it's going to come out same.
Yeah.
And that's why it makes sense what you said, again, that taking 1 year, and if it's it might stretch because maybe Bank of Canada decide no, we're doing too fast, right? We don't want to do that. And we start seeing some traction in the transactions and everything. They say I'll halt it. That's again 2 years. So my mind is saying that I should take for 2 years the fix, and then I can sleep.
Yeah. See, and that's exactly it. It's whatever is going to make you comfortable in your own home, especially, right?
Correct.
But yeah, there's lots of different options, and it's just everybody's mind is in a different bit of a different place. Right?
For sure, and just like I said, what you be comfortable looking to all the options. Good thing is there are options.
Yes,
there are, and mortgage brokers, banks, all your business. They want your business, so they're not pushing you on that. Especially this time of the year when the new budget and everything, the new targets came out. They're eager, and that's why I'm seeing they offering bonuses and stuff like that. And especially when you're with the same bank, you can negotiate better depending upon how many products you have with them, multiple products. And that came to my advantage with RBC as well, because they're able to see all the assets and everything, and they were able to evaluate better, I guess. But also they have the better self-employed program.
One thing to add to this too, because I think it's important for anybody that's listening, is we had a lender, and there's a couple of them actually this year, that were offering discounts to the traditional rates that they would offer if you took on another product with them. Right? Maybe you had your payments coming out of that banking account from that institution. Maybe you applied for a credit card with them, right? It's all cross-selling and things like this, but
it is. Yeah, but it's
take advantage of them,
for
right?
sure.
Why the heck not?
It's nothing different than you're going to the Bell and you want internet, you want your phone, and you want your security things these days all together. That's a package. You get the better discount. Yeah. Same thing with the bank. Like a bank want the business from you, not only just a mortgage. They want other products. Of course, they want to sell you as well.
And it's like, if you're going to do something for me, what am I going to do for you, right?
For sure. So. And a lot of time it happens like, we can give you best rate, but we want the funds to be transfer your down payment, everything.
Exactly.
Open the account.
We see some lenders that do that too.
Some lenders do that, like some mortgage.
And if you're able to do it again, or even looking at it from a bank account perspective, sure, you let's say, random example, you bank with RBC.
Yeah.
You're moving to TD.
Correct.
And TD says, I'll give you a better rate, or I'll give you cash back, or whatever the case may be, if you have your fund, if you have your payments coming out of a TD account. Is it really that hard or difficult of a task to do, to change that thing around, right? Probably not. It's really not, right?
No, it is. Like, it's a level of comfort.
Yeah.
And that people are concerned about what the penalty they're going to pay.
In
some cases I've seen, they can say, okay, you have to pay the 3 months, we will pay that for you.
Yeah. Sometimes
they do that as well, right? So it's good to know
lots of incentives.
Lot of incentives, and what are the options you have. When people don't have options, that's what they get into issues and troubles.
Well, in a moment like this, and I know we have to keep going on, but I have so much to talk about, but in a moment like this, when you have so many different lenders offering different rates, like I have a rate with Bank A that's going to look completely different with Bank B. So those clients that are with Bank A that want to go with Bank B, they're going to say, well, how much is it going to cost me to do that?
Right.
And that's when things play into like cashback options, rate discounts for moving applications from a bank to a different bank, right? Those are all things that the traditional client or applicant wouldn't know, because it's not, technically public information for the most part. Sometimes you have to do a little bit of digging to determine what am I going to get by moving things over, and that's where we can come in and play it out, right?
Yeah.
There's a lot of lenders that offer these things. Well, what are they, right? What do I have to do to access them?
For sure.
And then let the client make the ultimate decision at the end.
Well, that's what difference makes with the bank and everything. And I always go to the mortgage broker first to getting what my options is. Even I end up like in the same place, but at least I know my options, right? If it's doable.
Correct me if I'm wrong, because you've had the experience. It seems like it's a lot more of a straight path when you go with the branch. This is what we're going to do, and that's it. As opposed to being like, well, we could go down this road, or we could go down this road, or we could go down here, and we could go down here, or we could go up or down, right? Like many different routes and ways to go, and access to information, I find too, is tremendously, it's just different when you work with a mortgage agent compared to somebody at the branch. By no means am I talking negatively about them. It's just the reality of the situation.
No, it's just the type of business, right?
Yeah.
And it's, people come and negotiate, and even I say, have you interviewed other realtor?
Yeah.
And
getting a second opinion
they say,
is massive.
you're the first one. I'm thinking, how about this? I know we're not agreeing on a few things.
Yeah.
Why don't you interview the other realtors as well?
Yeah.
And see if I can provide some value to you. Because me and you working as a client and service provider, and it might not work for you. I might not provide you what you're looking for. Right.
In the same sense, I've had some clients that come to me and they're like, Tyler, I was referred to you by so-and-so. I'm working with an existing mortgage agent that I've worked with for 10 years.
Yeah.
And I just want to get a second opinion. And I'm happy to have those calls, because it's so important to make sure that you're making the right decision. And in some cases, I have, found an opportunity that was not discussed previously.
Yeah.
And, those are difficult decisions or conversations to have where it's like, this was missed, right? So, but again, getting that second opinion is very, very important. And I recommend my clients to get second opinions as well, even when we have an approval and everything is ready to go, so that they feel confident.
One thing, say in any service providing thing, as a agent, realtor, mortgage agent, insurance agent, when you become desperate and you want that, you're going to do things which are not comfortable for your client, or may hurt in the long term, maybe it benefit them for short term, and the long term do. And people are on those scenarios right now because their financial situation was not looked properly, and that's why people struggling in paying their mortgage payments right now is because they were not giving the right advice. So having said that, looking to the question number 2, which I already covered, can you explain the current popularity of fixed rate mortgage in Canada and why they might be a good choice for homeowners? I think like we already covered that part.
For sure.
Moving to third question is, what factors influence the 5-year variable mortgage rates and how have these rates been behaving recently, right?
So how have they been behaving? Strongly, really, right? A lot of lenders are offering significant discounts to prime rate, and I'll talk a little bit about prime in a second, but we're seeing the return of the variable, in my opinion. And it's great to see because in my opinion, it offers a flexible solution to those clients who, might be okay with taking on a little bit more risk in the fact that their payments may differ or the amount of funds that are being allocated to interest and principal may change.
Right.
But again, giving the ability to renegotiate terms a little bit earlier. If you have to pay that 3-month interest, it's generally not that high in the grand scheme of things, right? So this is a very interesting time, Vish, because we're seeing lenders offer completely different solutions on the variable side.
Right.
I have one lender where their regular variable rate is going to be like prime less, maybe 15, prime
How
less,
much is prime right
20
now?
basis points, 7.2.
7.2.
Yeah.
So they're able to give the discount on those ones.
Yeah. So maybe you're at prime minus 0.2. So you're at 7%.
7%.
And then earlier we were talking about some variable rates that are at 6.5%. And we typically will see variable rates and rates in general offered around the same range across the board. But it's just very interesting to see some banks offering much different variable rates than the other ones. And it gives us an opportunity to get our clients back on that variable wagon if that's something that they wanted to do, right?
But what was the most asterisk stuff like you see on those ones, like when they're offering that significant discount?
No, it's not. It's
Oh,
not.
really?
It's no like hidden fees. There's no hidden features. It's not like
So the all the terms and all the things, penalties, and it's same.
It depends bank by bank,
Oh,
and
wow.
it's a bank decision too that they have to make, right?
Right.
Does it make sense for them to lend the money that they're borrowing at this amount? And if they can stomach these margins, then great for them.
Yeah.
Other banks know, and this is a thing too. Some other banks will know that their clients have to go to them so they can charge whatever rate they want to charge.
Yes.
And there's a couple of lenders that have significantly different policies with relation to qualification thresholds. So they'll be willing to make exceptions to go well beyond the norm. So that's why they can say we can offer these these higher variable rates and still get the business because our policies are different. If we're talking solely about a client it's the slam dunk, easiest A+ deal ever, we have a lot of different options. And there's one lender that I would say, definitely let's go with them because they've got the best variable options on the market today, right?
So let's run this scenario, okay? It's not like I'm going to do, I'm pretty loyal with the bank or whoever I work with, right? But let's say now I got everything is all the ducks in the row. Now it's come to the interest rate.
Yep.
All the work was done by a bank.
Yeah.
Now I'm in the terms of like negotiating that because my situation, like self-employed situation. What are my options to go and shop around still for the interest rate?
Yeah.
Because I qualified over here already.
Yeah. You're in a good position, right? Because you know that you have the home, right? You're going to qualify no matter what.
Right.
Now, what is the best solution for me, period? And that's why I think for clients who are in your shoes that might have an approval with a bank, have a conversation with a mortgage agent who's going to tell you in one conversation all of the interest rates that are available out there. Even with some of the lenders that we don't have access to, we can still get that insider information to know exactly what they're offering.
Right.
So as opposed to you doing an hour, 2 hours, 3 hours plus, even a couple of days of driving around,
absolutely,
branch to branch, bank to bank,
right?
We have those conversations with us. We'll tell you exactly transparently what we can offer, who we can go with, and what we can do. And if you have an approval already, it sometimes gives a little bit more, encouragement to the lender to say, okay, well, let's try and retain this business and get it done.
For sure.
On that same topic, while you're in negotiations with rates, again, whether it's with your bank or you're just doing your own research online, you can tell your bank that you want a lower interest rate. And I don't know if everybody knows that, right? Because a lot of folks will sometimes go to the bank, they go to the branch, this is the rate, perfect, sign here, and I'm done.
Yeah.
No,
No, I didn't do that.
Yeah, no, and I know you didn't do that.
I know yesterday.
Because I made sure you did it.
Yesterday, I was having a talk, and we over the phone, and she explained to me, like, things like, this is what's going on, like, you want to fix variable, this is what I recommend.
Yeah.
And like, do me a favor, can you give me all those scenarios over here? And the amortization, the other one, like, now it's 30 years is very normal, regular thing, right? Sure. And this is what I want to do, which I told her, like, this is what I want to do, like, this is how much I want to pay, because I need some cash flow as well, and all the stuff. And I says, asking, let me do that and send it to you. So you can have all the scenario in front of you, and then you can decide. Wonderful, I refer her business as well, because she's fantastic. But that's the thing, like, when you know the options and not jumping, just like you said, okay, I'm getting panic, and that's why you said that don't do it 2 days before.
I know.
Do it, like, way earlier.
For the mental health of your realtor and mortgage agent, please do not change terms a day or two before.
No.
But again, a lot of folks don't know that there's sales manager discounts. There's lots of different levels of authority who can offer discounts to your rates. Even on my side, if I say, hey, look, we've seen discounts offered across the board. Let's get a rate update before closing. We'll get it done, right? Some lenders are awesome because they'll let you do it without even having the client need to sign the updated documents. So it's almost like a quick little cherry on top of the sundae when they get their final paperwork and they're like, Tyler, my mortgage rate is this much lower than it was before. And I was like, you're welcome. You know what I mean? So there's definitely flexibility. You have to ask, because what's the worst that's going to happen is they say, sorry, we can't do anything. And then you're fine.
That's fine.
You take the interest rate.
That's fine. Absolutely. When you have to take it, if you didn't know, like, and I probably won't purchase it, like, if I can afford that or not. Anyway, so exactly. You have to know your financial situation.
100%.
Can do that, because I don't think, like, a 0.25% or 0.5% is make a huge difference, the dent in your mortgage payment.
Of course.
It's sometimes it turned out like it was only $50. It's,
and then what's more important?
And we're wasting our what is it, like, people don't care about, like, what their time worth. So I look into that way. Okay, $50 a month I'm going to do, but I spend my 2 days spending my time.
Yeah, exactly.
Which is I'm more than $100 worth my hour.
Yeah.
Does that make sense?
Yeah.
People don't calculate that.
No, especially first-time home buyers, and not to discredit them, but they just don't know.
But it's not only the first-time home buyers.
No.
I have the clients over here.
Yeah.
I can tell you, I've told them, like, you got me. And they do their whole thing, which I'm already going to do anyway. And they'll do all the whole things, and they come to me and say, now what's the best solution? I was like, okay, why you wasted your time and all that stuff, right?
Yeah. It's about trust too, right?
But it's also,
we want all of our clients to trust us.
No, some people have that. It's not like about the trust issue. It's about, like, they need to know kind of stuff, right? Is they missing something? Am I missing something, right? Or anything? So which is not, like, I won't say it's not great, but the same thing is, like, what the value you're getting out of it, right? So
I agree.
That's so we're talking about the 5 years variable mortgage rates and how these rates been behaving recently. And we talk about that. Like, let's go to the fourth one. Could you elaborate the impact of mortgage terms and amortization on interest rates and overall cost for homeowners? We talk about 30 years. But, like, let's hear from you.
So amortization is, it's kind of a case-by-case situation for clients, right? Some clients will come to me, and let's just get something very clear straight. And I think we talked about it on the first podcast, but for a conventional type mortgage where you have uninsured style, you're going to put 20% or more down, buying over $1 million.
Right.
You have access to a 30-year or a 25-year amortization. Those are typically really the norm.
That's right.
If you have an insured style transaction, less than $1 million, less than 20% down, you can only take a 25-year amortization. And that's just standard across the board, right? Another option that's become a little bit more available over the last year is a 35-year amortization. And that's become available with some of our B-lending partners. And that can really help a lot of clients strictly from a cash flow perspective, right? If those clients have rental properties and they're looking at keeping cash flow as strong as absolutely possible, 35-year amortization might be something to consider. In some cases, I had last year 1-year term with a B lender coming in payments much lower than a 1 year with an A lender.
Oh, really?
Right? Which again is not the norm.
Yeah.
But it's something that happens, and that's how amortization impacts terms and decisions that clients will make. One thing to note too, with respect to amortization, is I have a lot of clients that will come to me and say, I want to pay my mortgage down aggressively, and I want to pay it down as fast as I absolutely can. I want a 25-year amortization. And I'm like, okay, why? Right? And it sometimes is a difficult question for them to answer because they think that that's what they have to do.
Correct.
For those clients, I typically will recommend to take a 30-year amortization. Again, it's all case by case, but I don't want somebody to take that 25 years and think to themselves, okay, crap, I should have taken the 30 because of whatever's happened in my life from the time I signed my mortgage until now. You can't go back to a 30-year amortization once you close with the 25-year. Re-amortizing your mortgage is going to be looked at as breaking the contract of the original mortgage. So for folks who want to do that, maybe they take a 30-year and they can create a reduced amortization by a couple different ways. Increasing your monthly payments, changing your payment frequency. It's not going to have a massive difference, but it will definitely impact. Or utilizing your prepayment privileges to help reduce that amortization effectively, right? It's all about flexibility, and I think it's all about having access to options and different solutions. So amortization impacts, monthly payment, of course, tremendously.
For sure.
But it also impacts rate in some cases. 25-year amortization in some banks will have a better rate than a 30-year. And I'm not talking, again, 50 basis points.
Yeah, for sure.
We're talking maybe 10 or 15 basis points at an absolute best case scenario. But again, that 35 is there. I had one lender doing a 40-year last year. The program was halted, right? Because I think they understood that maybe that's a little bit aggressive.
Yeah, because we were predict things going on, it'll be 50 years, maybe 100 years.
Yeah, exactly.
Amortization period is going to go.
For a lot of people that had the variable rates where payments didn't change, it was a little bit of a disaster there. So, if we're looking at it realistically, I think the most traditional amortization that we're seeing when clients have the choice is a 30.
Yes.
And then if they want to make those aggressive payments down to pay that off as quickly as possible, they can do it with a prepayment privilege. They can do it with the increasing payments and things like that.
I'm glad we came out to this question because I know more than 50% of the mortgage coming to renewal in 2024 and 2025. And when people doing those refinancing, I think this information can be very useful, knowing that where they can, keep the same payments, just like for some people. And some people say, hey, you know what? I'm tired of these interest rates and everything. I want to pay off my mortgage as soon as possible. So you can do those kind of things.
Well, let's talk very quickly about those people who are in that renewals type situation. Let's just say you took a 5-year fixed rate. If you were one of the lucky ones that did that when rates were under 2%, you're going to be coming for a rude awakening, right?
Big time.
But so what are the options, right? Some clients might not even know that a renewal can be taken to a different bank. Right. In the sense of when you, let's just say, random example, you're working with Scotiabank.
Right.
That's who your mortgage is with. And you took the 5-year fixed rate with them. And now Scotia is reaching out to you. And they're saying, okay, it's time to renew.
Right.
Some clients will get that piece of paper, look at it for 2 seconds and say, okay, this one, sign it and send it back.
Yes.
And now they've locked in, right? For a lot of clients and almost every single client, I'm recommending talk to a mortgage agent, talk to me specifically, right? I can plug myself, okay? I'm on the podcast for a reason. But talk to me and I'll give you that unbiased advice. And in some cases, I've told my client, you're best off renewing with the bank. Here's my recommendation for term. Or I can say, look, payments have changed quite a bit. Let's talk about cash flow and cash flow management. You're now on a 25-year amortization where previously you signed up for a 30. Let's re-amortize. Let's get that re-amortization back up to 30 years to help bring payments a little bit lower, right? And in most cases, you could get a better rate. as well, right? From just not even moving around, but working with a mortgage agent because of our relationships that we have.
Because you have the different options, right?
Exactly.
Different options.
So it's not like we're just talking about one piece of paper that has renewal options on it. You sign this and you're done. We're now opening up a booklet and flipping through hundreds of pages to say, okay, where should we fit this application? So yeah, renewal options. Let's talk about reamortization.
Right.
Let's talk about looking at different terms, because sometimes renewals, you might not even get that 1-year fixed rate. You might not even get, some of the options that are out there available with other people. Or, for example, clients who are coming up to renew, maybe they want to break up their mortgage now and to have some of it as a line of credit and some of it as a mortgage, because that can help with cash flow from an interest-only perspective, especially when prime is expected to start coming down,
right?
Or paying off your mortgage from an aggressive perspective. If you do it on a line of credit, you're in an open term,
right?
So you can pay it down much more aggressively without having to worry about prepayment privileges or prepayment penalties.
Nice,
right?
Nice.
So lots of different things. I think my biggest advice, and if anybody takes anything from this podcast away, it's at time of your renewal for the next 2 years, 24 and 25,
right.
You need to get that advice. You need to get that second opinion, because it's really, really going to shape how financially stable you are for the next little while.
Yes.
They're not going to be easy conversations. It's going to be a lot of math. It's going to be a lot of breaking things down.
And that's why you can see, like, it will be so busy.
Yeah, and that's why I have my calculator
always
on me.
All right.
But no, have those conversations and really understand what your options are. Right. It's not just the piece of paper you get in the mail or the email that you get from your lender. That's not your only option.
No. Right? I understand that. And coming to that, like, a few months ago, the charter came out. I'm not sure that's in effect yet. Mm-hmm. It's about, like, not getting the stress test done when you're moving mortgages, right? Yeah. Because that was a case before.
For sure.
That if you knew mortgage, like, still qualify for the stress test.
Yeah. Yeah.
And it'll be difficult for people who are not there when the stress tests were there, right?
Exactly.
So is that impact, like, it's already in place?
It's not anything that I've really seen have any sort of massive impact as happenings right now.
Right.
We've been chatting about it. It's also very recent.
Yes.
But I think it will... Well, put it this way. Otherwise, people are going to be stuck with one lender and one option.
Correct.
That's a piece of paper, and you now have limited the amount of options that are available.
Whatever they want to charge, they will charge.
They can do whatever the heck they want.
Yeah.
Right? And is that fair to us as consumers and as Canadians?
No.
Heck no. We should have options. And that's the end of the sentence. We should have options. Because, these banks can get very, very greedy when they know that they're the only option that's out there. So having those changes come into play is going to have an impact when all of these mortgages start to renew. And I think we'll start to see a lot of it happen at the end of this year, but more specifically into next year.
Yeah. So banks have to fight for the business.
Yeah, exactly. And that's what I love to see, because now I can position some against each other, right? And I can say, look, if you don't do this, I'm going to go here. And if you don't do that, I'm just going to stay there.
So that's a good news for the consumer whose renewals coming in, because rates are high, which you cannot avoid. Mm-hmm. But at the same time, you have an option to negotiate. And stress test is still like a 2%. That's a huge thing, which you don't have to go through. So that's wonderful. I think we covered a lot of good things in this last conversation. Mm-hmm. So how do external factors beyond a homeowner's control impact mortgage rates in Ontario? Mm-hmm. I know a lot of people know about it, employment rate, job market, employment rate, job market, inflation, gas prices,
GDP, everything.
GDP and lots everything. That's what's going on. But when you're looking into, are you looking into those factors when you're advising your clients?
We have to be mindful to a certain extent of a lot of those external factors that are happening. Right. And I know we talked about it too, is we can have a podcast dedicated to the economic outlook for 2024 in Canada, which I'm happy to do. But we have to keep ourselves educated. There's a lot of different subscriptions that I'm a part of where I get every morning, I start my day with a cup of tea. Because I gave up coffee this year.
Nice.
Wish me luck. So I have my decaf tea.
Yes.
And I read through everything that I have access to. And that's what keeps me up to date. Because there could be some articles that are coming out there that maybe will lead me to not go in this certain direction for a client.
Correct.
Who recognizes that this factor is at the top of their list in determining where they want to go, right? Or what interest rate they want to go towards. For sure. Everybody has done a very good job, in my opinion, or at least my clients anyways, of keeping themselves informed over the last couple of months, or at least the last year, because of how much information there was in the media about inflation and interest rates in general, and unemployment, like just everything. So to answer your question in simplest terms, we have to keep ourselves educated.
For sure.
There are many factors that will impact not only interest rates, but just an overall mortgage perspective, right? Like if we talk about the market itself, from a real estate perspective, if your home is not getting appraised at a certain area, right, especially from a refinance perspective, we might not be able to do anything, right? And I had a call with somebody not too long ago on a renewal side of things. We wanted to move their mortgage. They bought during a time where things were pretty high. Their concern now is my home might not appraise for me to move to a different bank, right?
Well, this is the answer when I'm listing properties and have that deep conversation with a seller a lot of time. You want to list in this price, but my biggest concern is that even we sell for this price, let's say, somebody like really loved this house, it's a dream house,
they're happy
everything,
to
overpay, but now the appraisal didn't come out. Are they willing to pay that extra money from their pocket, right? If that much they love.
Do they have?
Or do they have even the money, right? So pricing strategy for me, is always taking those into consideration. That is going to, even this condo, which I just bought over here. And sometimes I hate it that my price point when I list or I predict, it's on the spot. On the spot. And sometimes I say, I hate that. But sometimes I also take a pride in it because doing the research, looking to the comparative market analysis, looking to the ground level is not only the numbers which I'm looking to that it's listed, but what is sold, what the activities are happening, how many showings are happening on those properties, and that type of properties that's the buyers are looking for. That's in high demand kind of things, right? Taking all those 360-degree approach, and that's how I decide that price going to be. So even as condos, if I have a lot of deals coming out, the assignment sales. So that's a big one, right?
We've seen a lot of those over the last.
And then I look into that, okay, what's going to happen is, when it's going to close? What's the condo fees going to be? What are the other things I'm going to have to pay on that one? When I look into that, it was not lucrative to me because cost of building has gone so high that those prices not making any sense to me. Then I bought this property, which is only 2 years old. And they were sitting in the market for 4 or 5 months. And then I see coming from almost they reduce to 75,000. Then I pay 25,000, a little bit less on that because that was my valuation. And I'm really proud when the appraisal came out, actually it came out better.
Oh, yeah, see, there you go.
So I said, wow, this is good, right? Worked for me, not necessarily work for everyone,
of
right?
Course,
But having that information and having that, when you're listing your property, especially in the current market, and a lot of people now started saying that, okay, you want to cancel my listing because I think the spring market will be better, we will relist it and everything. I say, don't do that because you don't know what's going to happen. You will be off the market, you're still going to pay, and it will fly off. So even for the sellers, like I said, if you're ready to sell and you have to sell, then sell it.
I completely agree. The appraisal can make or break a deal. Let's just be honest,
Big
right?
time.
If it doesn't appraise at the value, and the clients, and during pandemic specifically, it was a very weird time for appraisals because people were just blowing their budgets.
Even the bank was doing
crazy homes,
bank was doing it was okay if the property was sold for 650 and next they come out the next property is listed for 675 or 700. They were approving it and that's again no problem because they knew that was going on for a long time. And that's what they got caught up like a few times as well.
Well,
And the new construction, like that's what's happening right now.
100%.
Right?
And that's why I saw some people were able to come up with the extra money. Maybe they got a gift from a family member that they were able to make that difference if they really, really wanted that house. I saw some renegotiations. So they've said, look, here's the appraisal.
Yeah.
What do you want me to do with this? Right? It's not me. It's just the way that this is being looked at.
This is the story happened with me in 2017.
Okay.
And we did the offer. And they have like a less money, so they were getting the cash back from the bank as well. For deposit and stuff. They did it. We put an offer. It was like a multiple offer scenario. They really liked the family. I able to speak their language. I didn't know that language. I just communicated with the seller. And our appraisal didn't come out that much. So, and said, hey, I went over there. I'm like, this is how the appraisal came out. Unfortunately, my clients cannot pay another $15,000. What we paying, what we already, contract signed. And it's not satisfactory to us. So we coming back. And they said like, well, we really like you guys and everything. In the night, we signed the mutual release. Can you believe that?
Wow.
In the night, we signed the mutual morning. To my surprise, I got the phone call from the agent, and it says, boy, I haven't seen in my life. This is my mom, which I'm listed for. And she said, let 15,000 go. We signed the deal. My client is still praising for me. Like, how you did that? Even the real agent telling how you did that. Like after getting the mutual release and then you did it again. They could have gone to the
of course
the other
anybody
person, right? Like who
listed for whatever the heck
who was a competition with me. They or maybe it happens like they move on. The other ones I don't know. But it was good for me. I'm like,
in those situations, you just gotta say thank you.
Oh my God! I was thanking like my clients because they were living in the basement and they were the first home with the kid and really hated that basement.
It's time to move on.
It's time to move on. When they got it, they say
they must have been
very happy, very happy.
Oh, that's awesome.
So appraisal, absolutely, that's a big thing for sure. So can you explain the concept of mortgage rate hold and its implications for fixed rate mortgages?
We're in a different time now where I would, getting a rate hold is always something you should do because why? It costs nothing and it's just there if you need it. If you don't ever use it, great. It goes away, it disappears. It's not like you have any charge. So it's always a good idea to get a rate hold. We're in a market now though, where we're expecting based on economists and forecasters advice, interest rates to come down. So getting a rate hold today
is easier.
It's not even that it's easier, but it's just that your rate is probably going to be lower by the time you actually need to use your rate. So having that rate hold might just be something for those clients who like having a little bit more security or like to be a little bit more comfortable. During the time when we were in an increasing interest rate environment, though, if you weren't getting a rate hold when you were thinking about buying, you were kicking yourself.
Some banks were not giving the bank hold.
No, I know. There were some that were picking and choosing the terms that they were offering rate holds on too, which is kind of slimy in my opinion. But what are you going to do? Talking about the idea of a rate hold, though, specifically, what is it? Most banks will let you secure a fixed rate for 1 to 5 year term, and they'll let you do it for 90 to 100 days. The most common is about 120 days. So you've got around 4 months to hold your rate, and you be able to use that rate if you buy something within that time. You'll have to close.
You have to close
before
that period.
120 days.
Sure.
Even if you buy something within that 120 days, but closing is after, you'll get updated rates. You won't be able to close. But I think still getting a rate hold is a good idea, especially on the 1 year side, because you just never know what's going to happen, right? So getting the rate hold is good. They'll still qualify you on that rate if you buy while you're within that period of time. I think in this current market, though, looking at rate holds, I wouldn't put as high on a priority list as I would have at this
Right.
time last year, or even at the end of the year last year too, right?
Right.
But still, definitely something that's worth getting because it's free.
Yeah, for sure.
It's nothing really that's going to be too impactful or stressful. It might cost you a hit to your credit bureau.
Right.
But if you're in the preliminary stages of an application, you should probably be getting a credit.
Mine is 20 days closing. So I'm getting this Friday even, like, I can probably still can put the hold on that. Not more than 5 days. I think, like, before 5 days, it'll be okay.
The typical lender will ask for no changes to be made around 10 business days prior to closing.
Yeah.
If it's an emergency situation and you have to make some changes prior to close, you definitely can work with it.
Yeah.
Or if it's a situation where there's been a massive rate decrease,
Right.
you can try and squeeze something in with a couple of days remaining. But yeah, the general rule of thumb is you want to have everything firmed up with your mortgage approval rate, including around 10 business days before closing, but you can be flexible.
Well, good advice. Good advice.
Yeah.
It might not
just to avoid stress.
Yep. It might not work for me, but that's okay.
Yeah.
And the reason I did all the calculation based on, even if nothing is going to change, still I'm okay.
Yeah.
Right. If it's that's bonus.
But for you got to go back to the advisor and say, hey, I know rates have come down. You can't tell me that they haven't.
Yeah.
What are my new options?
Yeah,
right?
for sure. Absolutely. Absolutely.
It's as simple as that.
Yeah, we're not going to discuss about inflation. Like, that's totally different subject, and we're going to talk about.
I'll come back, part 3.
Yeah, what are some key terms and conditions that I repeat, like, I say very slowly, and Yash is going to kill me because he knows, like, my audio go up and down, and then he blames me because I go up and down. So what are some key terms and conditions that homeowners should be aware of when signing a mortgage agreement? There's a lot of them.
I know, right? Where do I start?
But the key.
Well, let's just talk.
Let's see top 4.
Yeah. So let's talk about it from an overview perspective, right? Like just a broad looking down approach.
Right.
There's 2 different types of conditions when you're thinking about purchasing a home. There's conditions on your side, and then there's conditions on my side.
Correct.
So your conditions are going to be more like what? Inspection, financing, solicitor review, status certificate, things like this that'll get taken care of with the realtor side of things. Yeah. On my side, if I get a mortgage approval, they're typically always conditional approvals.
Yeah.
So they're conditional upon this, and this.
Okay.
On our side of things, just to make it very clear, when we apply for a mortgage approval, we typically don't get conditional approvals. We get firm, good, solid approvals because we've done our due diligence to satisfy these conditions before we submit the application. Right. So let's talk about condition. An appraisal is definitely one condition.
Yeah, for sure.
That's going to have an impact.
Yeah.
Satisfying income condition is major. Right. So we need to get those income documents, and we need them now, right?
For sure.
Especially if we're dealing with a condition financing type of situation. 3 business days is not a very long time.
No.
So when we submit those deals to the lender, we want to make sure we have that income condition ready to go.
Right.
Down payment condition.
Right.
Talk to your mortgage agent about a down payment condition because a lot of clients think that they need to move their money around into one account to make it look nice and pretty for the lender.
Yeah.
That's not the case.
No.
In most cases, that actually becomes more work for the client because the bank is going to see these big deposits going into a bank account.
Right.
Where did this come from? Where did this come from?
Yeah. You have to track it, right?
And we're typically talking about 90 days history.
Yeah.
That the banks want to see for a down payment. Sometimes it's 30 days.
Right.
So down payment condition is a big one as well. Credit, just, in a liability or a debt payout condition can be massive, right? The bank wants to make sure that if you have to clear off some debt in order to qualify for this specific loan amount, do you have the funds to do it?
Yeah.
If you do, where are they coming from?
Yeah.
Is it a gift from an immediate family member?
Right.
Is it savings that you have, from RSP or whatever it is for down payment? Like, so many different things that come into it. I'm trying to think of a couple of other ones. I had a condition that was set by a mortgage insurer to confirm that electrical work had been updated on a home that had some knob and tube. Right. And this is not a common one at all.
No,
it's not something that we see a lot, but after inspection was done with the realtor and the client,
ESA.
They determined there's some knob and tube here. And so on our side, you have that moral dilemma of, do I even really need to mention this to the lender? And the answer is, of course, you have to mention.
You have to mention
because you have to disclose.
They have all the data about the areas, and those areas are already flagged.
Yeah,
I came to know when I was doing the first time a deal in Hamilton, in certain area over there,
older homes.
They are the older homes which have those wirings, and it was flagged.
Yeah,
and insurance say
they don't like that.
They won't do it.
No.
Even I remember it was like credit union or somebody who was giving they even totally backed out.
Yeah. Oh yeah.
Totally backed out.
They look at that as such a liability and a risk to them that they don't like it. So this was a condition, again, not one of the norm, but the work has to be done, and we have to prove that it was done satisfactory to the insurer, and we'll do exactly that, right? So the client was able to still close, and everything was a good story at the end of it. Right. But sometimes there are these random conditions that can just pop up, and we were within a conditional period at that time, and I said, yeah, we're good to go, right? From a financing, they don't care. Yeah. But the inspection condition was still there. So when it comes back, we have to renegotiate things, and we have to see what's going to happen. So, lots of different conditions. Like once you get your mortgage approval, you can't just assume that everything is good to go. You can sign and you're done. If the person that you're working with on the mortgage side of things hasn't done their job, there could be an income condition that you can't satisfy. Right? What if, just a random example, you got paid a big bonus on one pay stub, and we use that pay stub to send to the lender. Right. Your next pay stub isn't going to have that bonus on it. No. And if the lender was not looking at the application properly, which sometimes happens, they're very busy, you now send them an updated pay stub because they've conditioned for it. And we're talking about income $50K less. Yeah. Now this is a completely different deal, right?
For sure.
So due diligence on the conditional side of things is, yes, once you get your approval, don't waive your condition of financing right away. Make sure you've talked with your mortgage agent who has gone through those conditions of the mortgage approval to ensure that you can close. Not just mortgage conditions on my side too, Vish, solicitor conditions. Yeah. Once you get an approval, you must be sure that you can meet those solicitor conditions as well.
For sure.
Otherwise, what are we doing here? We can't close.
Well, these clauses are for a reason. Over there, and when the experienced realtor who have dealt with different kind of situations like that, they putting it there, and sometimes it happens when I see they didn't put their due diligence. They just put the normal template clauses. They just put in there. Yeah, who's that helping? It doesn't help.
No, for sure.
So again, like the conditions are important, and that's why the importance of putting having those things really, like you said, if you submitted the document, that's what expedite the process. And even you put the 5 days condition. Yeah. I get the approval 2 days, 3 days.
Right? Oh yeah. 5 days
bank,
isn't enough.
The people I talked to, I'm like, okay, this is urgent, and first thing happened, they send out the appraisal. Because that's what the biggest concern in this market, right?
Absolutely.
So the first thing they send out the appraisal. When the appraisal comes out,
should be done as soon as whoever is working with the client is notified. Order it right away.
So make sure that you submitting your documents on time, and before you even write an offer, you have all those documents ready. That's why I cannot insist enough to people. Don't go and just look at the house without getting those things done. Because you're going to be tempted, or your wife's going to be tempted, and they want to put an offer right away because that property is going to go away. Even in this market, people think, you know what? I'll do it. I'll think about this. If you like the house, just do it, because so many times happen. Soon you thinking of putting an offer, there's a second offer coming in right then.
It's true.
And you might lose it, right?
Yeah. And even on my side too, right? Another easiest way to look at it is if you are planning on making an offer, I should be aware as the mortgage agent.
Exactly.
So that I have everything ready. And so that when I get my call from Vish to say, hey, let's do it, we're ready to go, deal accepted, all I have to do is click the button and submit to the lender.
That's what I do. I send out the MLS listing right away. Yeah. I like this property. I saw that. I mind thinking of putting an offer on it. Yeah. What do you think? Yeah. What are your options? Yeah. Is that price look okay? Yeah. And you're looking into a different, those listings coming in to you and everything, and that's give the insight. Yeah, Vish, I know you want this one over here, but it looks overpriced to me, right?
Yeah.
no harm. Like,
or, now I know my monthly payment will be this because Tyler looked at this specific property before I make my offer.
correct.
Maybe things are a little bit different now in my mind because I was expecting something different. So yeah,
This
have
is-
your mortgage agent.
This is the real, because recently it happens with me. Like, when I got, I was qualified for a certain amount because my cash is tied up somewhere else. And then when I put the listing, which was 50,000 more, and I was expecting maybe I won't go for 50,000 more because I want to be in comfort zone.
Yeah.
When I sent it, you said, you'll be fine. You'll be okay with this one because the condo fee is less because before we were calculating the another condo fee and all the other expenses, but now that's reduced, you're able to qualify, right?
Exactly.
So don't give up on things. Sometimes you look into, you know what, I cannot afford it.
Yeah. Just send it to your mortgage advisor, whether it's at the branch or if it's somebody like myself. Let us take a look at it. That's what we're here for. That's our job. And then if you feel confident and you feel comfortable and you get the green light from your advisor, let's go for it. Let's do it.
For sure.
Right?
For sure.
Yeah.
Cool. A lot of great.
So important to be prepared. So important to be prepared.
Nothing like that. If you're prepared, things go smoother, better. Not 100%, but at least it'll reduce that
stress,
risk and stress, right?
Yeah.
Here's the individual mortgage. How are individual mortgage offers determined, and what factors do lenders consider?
In terms of the rates that are being offered, or loan amounts, So
mortgage offers,
how they determine. So. There's lots of different ones that go into determining what type of mortgage a client is going to get or how big of a loan amount they're going to have. Credit is a big thing.
Yeah,
right?
for sure.
Specifically with an alternative style lender, your credit score will determine what interest rate you get, believe it or not. And with a lot of the AA banks and some of the monoline lenders, they don't really care so much about your credit score as long as it's not below a certain threshold. But credit score is one major factor that will determine interest rate. Especially with those alternative style lenders. Income is a huge one as well, right? What type of income are we talking about? Are we talking about somebody who's full-time salary employed? Are we talking about somebody who's business for self? And if we are, then those mortgage offers and terms are going to be different from the type of bank that we go with, entirely. So instead of going with somebody like a TD or a Scotia or an RBC, maybe we look at doing a shorter term solution with an alternative style lender to help that client get the mortgage offer and approval that they actually want. Not just one that would be, offered through a traditional walk into a branch and say, hey, this is what you qualify for, right? Access to capital, access to funds, very important, right? Are we talking about your own savings?
Yes.
Are we talking about help from family? And if we are talking about help from family, what type, right? A lot of people just think that going to mom and dad for some support or grandma, grandpa, brother, sister means to cut a check, here's your money.
Right.
Well, it could mean refinancing their property. And getting some access to capital that way. A very great approach that we've seen a lot last year was reverse mortgages. A lot of folks that wanted to help their kids move into their own home, but knew that they didn't have, an extra 100, 200,000 lying around. They said, let's do a reverse mortgage, give the money to our children. There's no payments there. And if the kids want to make some prepayments to help bring that down, the balance owing down on that reverse mortgage, they can do it, right?
Yeah, for sure.
But these are all things that you're not going to get that type of advice from somebody who's just looking in a certain box, right?
Yeah, for sure.
It has to make sense to the family, of course.
Yeah.
And you can even do a back end sort of legal agreement if you do something like that, where, we're borrowing money, but if I want to call that back at any time, I can, just to protect the parents or the grandparents, whatever the case may be.
Right.
So looking at factors like down payment, income, credit score is huge. Trying to think of some other ones as well, right? Area of home is
Location.
one too. Location.
Yes.
People don't ever think about it.
No.
I had an application that was in a little bit more of an agricultural style area.
Yeah.
And a lot of the lenders said, no, I won't touch this deal. right? Excuse me. That's okay. And it's because they don't have the comfortability from a resale perspective, right? The banks have to look at it and say, if I have to acquire this property, you know, and client doesn't pay, can I sell it? And they don't want the properties to be listed on there for months and months and months and have it more difficult and difficult to sell. So yeah, location of property is actually a pretty big one.
I'm glad you mentioned the location, because I know when suburbs started booming, before that, like, I know the appraisal happened on those ones, appreciation happened like not more than 5% on a single family home. And in some cases, in some locations, was lucky to have even 2 or 3% increase.
Yeah.
And those suddenly started getting 10%, 15 to 20%, 25%. That was a crazy. And I remember one of the concern which I have initially when things were starting is bank is going to look into that. That's appreciation. It's happening.
With a lot of the activity happening in terms of newer developments coming up, right? And new cities that are kind of just popping up out of nowhere, or cities that were there, but were almost looked at more of farm town, are now being looked at as a very desirable place to live.
That's right.
To build a family. So we're seeing lenders aware of that, and they'll update their lending guidelines from a geographical perspective, and they'll add certain cities to their lists. And maybe they'll expand their borders of areas that they're willing to lend in. But with the bigger banks, it's not as big of a concern as it might be with some monoline lenders or some alternative style lenders. But it's definitely a factor that plays into a financial institution in determining how much they're willing to lend, or if they're willing to lend at all.
And like definitely like the kind of properties, for example, they don't have a sewer,
Big one.
some pump, like water is not there. The other big one was like for even insurance perspective is like now how far is the fire hydrant? There's a lot of properties. I remember like I sold property in Campbellville, which is rural of Milton. And in that area, like, one question came out, and she was like, how far the fire hydrant? And turned out like there's no fire hydrant nearby. Like, it's 5-6 kilometers, 10 kilometers away. Kind of things like, that was like if and buts. But I'm like, we have like properties, those are state properties for there, and they have. So it's happening. So it might not be from the same insurance broker. Maybe there's some other ones which are going to work out. Ultimately it's worked out pretty well. But these are the things like 100%. People don't even think about.
I know. Yeah, right. No one's looking at a home being like, "Where's the nearest fire hydrant?" Because if it's not one's close, I can't buy it. Nobody is thinking about that. Right? But that's why we're here.
Well, that's why we're here to provide those insight, real estate wisdom, which is coming from working with different scenarios. In this case, like, Tyler was here sharing out like different mortgage options, like different scenarios can happen, which can make or break the deal, right? So again, thank you for watching, and keep bringing your love to us. Like, subscribe, share, and don't forget to comment. I would love to hear from you. You're the one who is the source for information. We know what our clients want, but I like to know masses, like, but what burning questions you have and what you want us to explore more. And so I can invite those guests over here to give you the insight from their perspective. So thank you for watching. Thank you, Tyler, again.
Thanks, Vish.
And we'll see you next time.
Thanks, everyone.
Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.